Hi traders, it's Sammy from Secure Signals here. I'm just going to quickly show you a nice little method to implement some trades with. So if I just go on my charts quickly, if you go on Secure Signals, if you just go on the Trading Hub, you can find a set of charts if you can't have access to things such as freestockcharts.com or MT4, etc. This will work on your phone, mobile, anywhere. So if I just open the chart bigger. Okay, as you can see, we've got an empty chart here of Euro USD. If I quickly put it onto 5 minutes, as you can see, Euro USD, each candle is representing 5 minutes, etc. There's no indicators on at the moment, it's just candlesticks. So if I quickly put on some indicators, so click up here, I'm going to use exponential moving averages. So if I type in EMA, you can find it here, moving average exponential. So I'll click this twice because I need 2 of them. And I'll also need a Bollinger Band. So I'll click the top one here. So as you can see, all these indicators have been added. You can close the volume one, which is a preset one. So as you can see, the Bollinger Bands and the EMAs. So if I quickly go over on the EMAs, you need to go on inputs and set them to 180. I'm going to keep that one blue. Oh, actually, let's make this one red. And then EMA 360, I'm going to make this one blue. So as you can see, there's 2 lines here. These are the EMAs. So this is the 180, this is the 360. And the Bollinger Bands, we're just going to leave them how they are. Basically with this method, all you got to do is line up the candles reacting with the Bollinger Bands with the EMAs. So for example, if the 360 line, if the 360 and 180 line is above like the candles, that means it's downward trending, and if the EMA lines are under the candle, that means it's uptrending, as you can see. So if we just look here, this is a downtrending chart, downtrending, downtrending. So what you want to do is you want to look for areas of basically where the EMAs are split quite wide open, like here, not here, not here, not here. This is a really good one. Not here, not here. Here's a decent area. Here's a nice area. This is risky, risky. This is not too bad actually. This area is alright. So basically what you really want to do is you wanna let the candles close on top of the Bollinger Bands, or in fact what you could do is draw support and resistance lines. So for example, if you look here, there's a touches here, 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 here several times. So this is a good resistance support line. So if I drew this line in here, and then as you can see, it's downward trending. So we're going to look for a put entry. So as soon as a candle closes above the Bollinger Band, we're going to look for a put, but as long as it has touched this EMA. But as you can see here, this spike here, it touched above the Bollinger Band, hit the EMA, and it crossed our support and resistance zone. So what you do, you just enter a put here. But if I look for a better example, a less riskier one, because what I recommend is actually looking for candles that close above the Bollinger Band, because as you can see, this one didn't actually close above it. But if I look here for example, and here, you can see it closed above the Bollinger Band, hit one of the EMAs, and just went all the way back down. So what you're going to do is, because it's on the 5 minute chart, you want your trade to be about 4 to 6 candles long. So that's about 20 to 30 minutes due to it being a 5 minute chart. So as you can see here, for example, it closed, say you entered here or here, and these candles here. So 4 to 6 candles is 1, 2, 3, 4, 5. Basically you would have closed here with a put entry around here. The same goes for here if you entered here. 4 or 5 candles, boom. Same with here. Same with when you if you entered here. If you entered here. Okay, so what do we do here? As you can see here, it's crossed the EMA, but it hasn't gone out the Bollinger Band. So this one would be a risky trade. However, as you can see, it closed above Bollinger Band here. And 1, 2, 3, 4, 5, 6. You still would have been in the money, even though it's a riskier trade. But the reason why this one worked is because there is a little support line, as you can see along here. So what you want to do is, before you enter, just look if they're showing signs of rejection before or signs of reversal like previously in the chart, then it should be fine. So now why I say there should be a big gap between the lines is if we look somewhere here, okay, if we look here, as you can see, price, the Bollinger Band, the EMAs are below the candles, so that means it's uptrending, but it's not really showing a significant trend. It's really just going sideways. So like the candles, this candle for example closed below the Bollinger Band, hit the EMA. However, 1, 2, 3, 4, 5, 6, it would have just been just in the money, but as you can see, it's really risky. Same with if I do it here. Okay, this one won nicely, but 2 or 3 candles later, it would have just gone back down. Same with here. Like here, for example, you wouldn't enter at all because the EMAs are now above the candles. So what you do, you'd enter put here. 1, 2, 3, 4, 5, 6. You would have just won or maybe drawn it. But as you can see, it's just really risky. So it's best to do it when there's a big gap. This works with all pairs. So if I on USD CHF, you can see the same patterns. If you entered, for example, if you entered here, for example, you 1, 2, 3, 4, 5, 6. You would have won by about 4 or 5 micropips. It's risky. Okay, if you look here, this is a nice one. See, it's uptrending market as the EMAs are below the candles. So look, this one closed, touched the EMA, boom. Same with here, same with here, same with here. The strategy isn't foolproof, as no strategy is foolproof. It just all depends on the market, but this is a very reliable one of the best methods around. And yeah, if this is helpful for you, then please leave a like, share, comment, subscribe, and I'll see you in the next video. Cheers, bye bye.